There has been different types of assessees under Income Tax Act like individual HUF, private limited companies, partnership firms, LLPs. Only out of all these, HUF, that is Hindu Undivided Family, is not very well discussed in different seminars or maybe among the individuals. So there has always been a confusion as to who can form it or which religion can form it, how to plan a tax with a assessee as HUF, and who's the karta, what happens if the karta suddenly dies, and whether minor can be a karta, whether woman can be a karta. And to answer all these questions, we are today here with our presentation on HUF. Friends, welcome to the accounting school again. Now, as you all know, we are running this channel for quite some time, quite few months, and we discuss here different technical topics. And time and again, I have been telling you that this is just the information, or you can say a concept review, which we are discussing here. So whatever points we discuss here, do not take it directly as a decision or as an advice on any matter of income tax or ROC for that matter. Please consult with your consultant. You can always put your queries or even email to us, and we would definitely try to solve them all. So with this, let us start with today's topic of Hindu Undivided Family. Under Section 231 of Income Tax Act of 1961 and new with the new Income Tax Bill, the same section continues for the definitions. So Hindu Undivided Family is again defined under Section 2 Undi of new Income Tax Bill. It is a Hindu undivided family. It is a family which descends from a common ancestor. Like say a grandfather, your paternal grandfather in your house. So your grandfather, grandmother, your parents, your sister which is unmarried, they all form a part of the Hindu undivided family of your grandfather. Now it is not formed under any contract. It is automatically formed under the family. And even if apart from Hindus, Jain and Sikh families also, even if they are not governed by Hindu law, they also can be considered under the Hindu undivided family, and a separate assessee can be formed as a HUF of any person from Jain or Sikh community. Now this HUF income can be assessed as income only if there is a co-partnership. Co-partnership means there are members, the co-partners, which are sharing the equal share in the HUF property. And these co-partners are all, as I told you, grandfather, grandmother, your parents, your children, the unmarried sister or unmarried daughter. And the second condition is the property should be inherited from the 3 immediate generations of a male co-partner. That is a father, grandfather and great-grandfather. Any other property cannot be taken into, cannot be treated as an ancestral property. However, members can put their properties in the HUF property for assessment purpose. We have made a presentation on this, and we will go through the presentation, and after that, if you have any queries, you can always write to us. So let us see the presentation. Let us see the presentation of the Hindu Undivided Family. Now the single member cannot form HUF, and as it is widely believed that one must have a child to start a HUF, it is not so. The marriage automatically would form the HUF of a person, and the members and co-partners are the 2 different terms. So the members would be all the members who would share the property and earnings of HUF, and co-partners are those who can actually demand the partition of HUF. That is the difference. And once the HUF is formed, the registration requirements are same as per Income Tax Act, that with the PAN and everything, the PAN has to be registered, PAN has to be obtained. You have to give the names of the members, co-partners, and the PAN would be allotted to you. For income of HUF, we have a separate slide here, so that we can see how the income is generated for HUF. And composition of members, like the status of adopted child is, the adopted child can be a member of existing HUF, but he or she cannot be the co-parsoner, that is, he cannot demand the partition. So these are the ways by which HUF can build the corpus, like by ancestral property or gift from other HUF or the sale proceeds. The details of the properties which can constitute property of HUF is given in the information. So the HUF gets the separate PAN and it is assessed as a separate entity with the income tax benefits of minimum exemption amount, benefits of deductions under ATC like life insurance and ELSS investments, etc. It can also own a residential house and the rent also of that residential house, if the property is let out, the same is assessable under HUF. There are certain incomes which are not assessed under HUF, like if member has converted or transferred his own property into family property without adequate consideration, the income is not taxable under HUF. Then Stridhan, that is the property of a woman, absolute property of a woman, is not assessed under HUF. Personal income of members is not assessed, and if the individual property is of the daughter, then income arising from that property is not taxable in the hands of HUF, even if that property is vested into HUF by the daughter. For using HUF for tax planning, one has to have a property in the name of HUF so that the rental income of that property can be assessed under HUF. Or maybe some family business is registered under HUF, then that profit can be generated and taxed under HUF. And any expenses like remuneration paid to Karta or members are allowable deductions. HUF can also grant loans to the members. And for family settlement or arrangements for resolving dispute over property among HUF members, they are not considered as transfers if any property is transferred for such matters. However, there are a lot of technicalities involved while transferring property within HUF members. So one has to take a proper advice of a consultant before doing so. There are certain disadvantages, like members have equal rights on assets. So this can create a complication for getting consent for sale or distribution of the assets, and because there are new family members getting added, and so the management and division of assets becomes a problem and may lead to conflicts or legal battles. Then the dissolution of HUF also can become complicated due to logistical challenges, that most of the properties may be in villages and members are staying in the cities. Nowadays, families are more preferring nuclear families over joint families. Hence, the relevance and importance of HUF as a tax saving tool is declining. Then there are increasing cases of disputes and divorces within the family, which are again complicating the situation and diluting the benefits of taxability under HUF. As we are aware, partition of HUF can be either total partition, where there would be complete division of all assets and all co-partners receive their designated portions and HUF ceases to exist, or there will be partial partition with some of the members opting to go away with their share of property and the HUF continues to exist with the remaining members. There are a couple of important points that as a HUF, once you start filing the return, it becomes an annual ritual. So considering all the income, and clubbing provisions, etc., you have to file the return of HUF annually. Then if some member has contributed asset to HUF as a common asset, then later on, even if the original owner, previous owner wishes to sell, it cannot be done unless there is a consent of all the HUF members. Then, and if there is only a female member remaining in the HUF, then a female member can become a Karta However, tax implications remain unclear because there is not much clarity in the law. So these are some of the points which needs attention before you plan HUF as a separate legal entity. Friends, that was all about Hindu Undivided Family as a assessee and how the income from HUF is taxed. Queries, do write to us. Thank you for watching, and let's meet you in the next video. Thank you.